President Trump said he is directing representatives to buy $200 billion in mortgage bonds to drive down rates, blaming former President Biden for what he called a broken economy marked by inflation, crime, and an American dream. He says his administration is restoring. Biden ignored the housing market and instead was immersed with high crime, open borders, runaway inflation, the Afghanistan disaster, and military that he left in chaos and confusion, Trump wrote on social. Everything was broken, but I, as the President of the United States, have already fixed it. Now I'm giving special attention to the housing market because I choose not to sell Fannie Mae and Freddie Mac in my first term, a truly great decision. And against the advice of the experts, it is now worth many times that amount, an absolute fortune, and has $200 billion in cash. He continued, because of this, I'm instructing my representatives to buy $200 billion in mortgage bonds. This will drive mortgage rates down, monthly payments down, and make the cost of owning a home affordable again. Tom.
This is only one part of the puzzle. So he's obviously working with Bill Pulte, Fannie and Freddie. We assume that. Bill Pulte isn't mentioned, but Bill Pulte runs Fannie and Freddie. And so they're going to put $200 billion in mortgage bonds. That is available liquidity for FHA compliant mortgages, basically, right? Mm-hmm. So it's a stack of money. However, those houses still cost the same if housing prices don't moderate. And we have a limited supply of new building because building from Toll Brothers, Pulte, Lanier, there's like 4 of them that they're the majority, haven't had a chance to catch up with building yet. So you need supply to catch up so the price of the houses will come down a little bit. And then, yes, you've got a mortgage that's a more affordable rate. However, a related story is escrow balances are going up. And that's where people are being asked to have set-asides, your payment plus a small escrow balance. That balance is like a little savings account to pay your property tax at the end of the year. And escrow balances have been going up. Why? Because the value of the home went up. We crossed 1231, and certain municipalities, depending where you live, reassess you based on 1231 and give you a new property tax. So this is a little bit artificial to take all that cash to go put the bonds out there so there's money available to lend. The bigger issue is still that the homes are expensive. There's not a big supply of new homes as alternative to purchase, and the insurance and property tax are linked to the current value of the home, which is still high. So this is a good start, but it's not a magic elixir to fix the whole market.
Brandon.
Yeah, I think it's just another name for QE. So, if you're artificially pushing down the price of interest rate, or the level of interest rates, then that's quantitative easing, and it's going to, make it more appealing for people with extra money to buy houses because the rate's lower. So it's going to ultimately push up the price of houses. Like that's when housing prices went up like crazy, is when we dropped rates to zero. It went up from like an average of 350,000 to an average of 475 nationally from 2020 to today. So yeah, I don't think it's a long-term good idea. Like maybe it's a short-term, sounds good, looks good type of thing, but no, it's not. It's not a good long-term strategic plan. The only thing that's going to fix it is if we build a ton of houses at a much more rapid pace than ever. If the government subsidizes, or like if they're going to drop rates for anything, it should be loans for home builders so they can build houses faster.
Mark.
Yeah, I think that sort of misses what's happening here. I think building more homes isn't necessarily the answer, because it's not just more homes. We have supply and demand in key areas. People need to live near city centers. They need to live by airports. They need to live by business centers. And so we can build more homes in the middle of America, but what good does that do? Oh, yeah. We can't build more homes where we actually need the homes. I think on top of that, the mortgage payment is only one piece of it. So we've seen insurance rates. I mean, you're in the insurance business. In California, in some areas, it's impossible to get insurance on homes. I have a place in Texas, in Austin, and rates are up like 5 times.
Rates are up 5 times.
Yeah, I mean, my insurance went. We have a ranch property there, and my insurance rates went up like crazy. And so that's really affecting the home building market. On top of that, you have all the regulations that have piled up. So the costs to build a home, not just the hard costs of lumber and steel, et cetera, but the regulatory costs and stuff have gone up so much. So there's a lot of problems that are holding the price of homes up as well. If you look at the U.S. median average of homes, it's like a perfect proxy for inflation. It rises with M2, rises with the Fed balance sheet. So I think inflation is in the seat here. Sure, we can lower rates a little bit, and that helps a little bit. But at the end of the day, the last thing I'll say is that nobody really buys the price of the home. They buy the payment.
Correct.
Right? And so even if I can bring the rate down, I'm still going to buy the max amount I can afford to buy based off of my income. And so the price of homes is just going to go up when rates come back down.
Rob, go back to the story you had just a second ago so we can see the escrow effect and what it said is the property tax. You were just there 30 seconds ago.
And if we could look at the insurance rates.
Yeah, they were right together. You had them right together just
Was that ChatGPT?
one screen ago.
Close it out. Hang on one second.
No, it was anyway. It showed that since 2019, how much the property tax rates were up in the escrow, and then right below it, it had the insurance. You were just on one of the other tabs. It was like only one. There we go.
45 to 62.
Yeah.
Escrow payment for homes
No,
in the
that
U.S.
was-
has increased approximately
He
45 to 62%.
he had it a minute ago. It was just one page back on one of those.
What was
tabs.
it? Though? What was it saying?
It was saying that over 5 years that the pressure on property taxes had gone up 27% over 5 years. Just property
Rob,
taxes.
go to each page you're on and just go back one page on each of those pages.
I already
you're on.
closed. I had closed it out. That's why. So when I go
That's
back,
what I'm saying. If you go back, that could. Okay. I got it.
But
And then it also talked exactly what Mark was talking about, the insurance cost, because the insurance cost chases rebuild cost, number one, and then changes loss cost. So if your house becomes more valuable, then your insurance goes up in a static market because of rebuild costs. However, then you have loss costs, disasters, and insurance raising cost of capital and loss risk. Suddenly it all goes up. And you end up even in Austin, Texas, 5X.
But then it gets worse because then you have the state of California. We had the wildfires. And then you have regulatory
the
problems
loss
where they've
cost.
driven the insurance companies out of California. So now many homeowners in my area, you know where I live in Orange County, I'm considered a high fire zone. I live on the beach, but I'm a high fire zone. And many of the people I know in my area, they can't get insurance. So now they have to buy into like a state funded insurance. It's the only way they can get it. And the rates are enormous.
Insane.
There's competition has
And
gone
the state-funded insurance it only covers to $2.5 million or something.
friends of mine that are in the insurance business, many times they have customers and they can't get them insurance. They're not even able to get
This is
them.
the hysterically named Fair Plan.
Fair plan.
Yeah.
A lot of the brokers have been driven out because the insurance companies had to cut brokers because they
Right.
can't even afford to pay the
Are
brokers.
you at a point that you guys are talking about leaving or not yet?
No, not yet.
You're not yet.
Mike Tyson told me it's expensive to live in heaven.
Is that what it is?
That's what it is.
Yeah. So
Yeah.
that's the. So can anything ever happen that you would leave the state?
Sure.
What's
sure.
the turning point that you would
I mean,
say?
sure. I mean, during the pandemic, Newsom wanted to be, the most strict state as far as lockdowns. I
Right.
won't live lockdown for sure. I left the state in 2021. That's why I bought my ranch in Texas. I don't eat top ramen in McDonald's every day either. I pay a little bit more for food. I could pay a little bit more for a quality of life. But yeah, what would change would be something that would restrict my daily life, like restrict my freedoms. That would be something. The other thing is back to this billionaire tax that are seeing this mass exodus. I do have friends that are now working on moving out of the state. And so at some point that could potentially drive me out. We'll see.
Well, if it gets passed, remember, they only have to move one letter, change the B to an M,
Yeah.
and now it comes after the rest of you.
No, I know. And then they floated the idea of having it retroactive, right? So
To
then,
January 1st, 2026 right now.
right. So but they floated ideas in the years past of it even going back longer
This
than
is
that.
a scam. We've talked about it before, but people need to hear this. Ro Khanna says, this is a ballot initiative. Gavin Newsom says, this is a ballot initiative. Wait a minute. SEIU, Service Employees International Union, which is a giant union in Nevada that happens to have a very high membership in the state of California with government employees. is the sponsor of the ballot initiative. So all the politicians are saying, oh, this isn't a bill, this isn't a tax that we're putting in, it's a ballot initiative, and the people are putting it up.
Sure.
The union blue-collar workers are putting it up. Yeah, but who's putting the union up to do this?
Right.
And the answer is the politicians are. And at the end of the day, people believe, and accusations have been made, that at the end of the day, we're going to find Gavin Newsom and Ro Khanna's fingerprints on this somewhere. But right now, it's a ballot initiative, which means that the emotion of the voter, driven by 500,000 of these union workers, and then the lower half, it's going to pass by 55. You can't get less than 55% of the vote on this. And so it's going to pass, which is why everybody, Pat, is handicapping, saying, well, this is a ballot initiative. It's going to pass, because there's no way for it not to pass. How do you find 51% of the people in California that are not in favor of, hey, you make 50 grand a year, tax the rich? Yeah, okay, Proposition X, I'm in.
Right.
That's what's going to happen. And so people are out. You read the bill, and you got to go in and not bill. You read the ballot initiative, and there's a scary part at the bottom of it. They call it the billionaire tax, but it's like giving the government a knob. And what do they do with the knob? They just turn it. And it's going to extend to others. With one click that's inside the ballot initiative, you can go down to $500 million net worth. So what does this mean?
Every homeowner in California.
The more, which means the more in trouble California is, this becomes a tool they're going to use.
Tom, let me tell you how I view it.
It's not a billionaire tax.
Yeah.
It's an asset seizure, progressive over time,
Yeah.
for bankrupt California.
Let me tell you how I view this.
Sorry.
This
No,
morning,
I appreciate
I've
that.
had coffee.
I appreciate the color on that. And
somebody sends me a Manek this morning about decision making, developing, building people, all this other stuff. And this one guy, hey, what if I don't want to do this because of this? I said, listen, the way I make decisions is long term. Okay, parenting, long term. Finance, long term. Business, investments. We're going on a 40-year run. We got 38 and a half more years left on our 40-year run. Long term, right? So if you sit there and you're playing the long-term game, you have to ask yourself, do you think California is more likely to be more business-friendly? Do you think they're going to be more likely to be less woke or more woke? Do you think they're going to be a safer environment for your kids? Do you think they're going to make better decisions for fires, for earthquakes? How do you think they're going to manage crisis? If your level of confidence and optimism says, I think long-term they're going to be fine, go for it. If it's not, you have to start really thinking about long-term. For those of you that run small businesses, this is one thing that most people are not aware of. We run a consulting firm, ourselves called David Consulting, where we do engagements with around 10,000 businesses from 60 plus countries around the world. And this is 75% of our business. It's one of the best kept secrets we have in our company that no one knows about. If you come to our office and you see how we grew 9 employees just a couple of years ago to now 165 full-time employees, and if you go downstairs on where David Consulting is at, the energy there is electrifying. If you're a small business owner yourself, anywhere between 10 million plus $500 million revenue, if you're on that range and you want to find a way to get strategies, because each phase of a company goes through 5 phases, and each phase you have 5 challenges you face. If you want to know what those things are, go to beddavid.com, all the way to the bottom, fill out the information. We'll give you that 18-minute breakdown of what those 5x5 are. And then if there's a way we can help you take your business to the next level, whether you're raising capital, whether you have a compensation plan that needs to be readjusted. We just had the most incredible meeting last week with our firm on Tuesday and on Thursday, whether it's comp, whether it's LTIP, equity, whether it's expanding in a new market, regulation, marketing, podcast, different ways of getting your story out there. You want to learn more about how we can help you out, go to beddavid.com. Fill out your information. One of our consultants at the firm will get a hold of you. If you enjoyed this video, you want to watch more videos like this, click here. And if you want to watch the entire podcast, click here.